Okay, I'm going to look at Spin Master here. Symbol is toy, appropriately so on the TSX. 3665 is what it trades at. $3.8 billion market cap. They're a children's entertainment company. They create, design, and manufacture. Their manufacturing is all outsourced, and they market diversified portfolio of innovative toys, games, products, and entertainment properties. They are best known for some award-winning brands, including Paw Patrol, Bakugan, Kinetic Sand, Air Hogs, Hatchimals, Rubik's Cube, and Gund. Many names that I recognize from that we've given presents to our kids in those areas, and some of the names like Rubik's Cube have been around for basically ever in the toy arena. So what brought us to the question today? Well, the company executed on an acquisition. On October 11th, Spin Master reported a sizable strategic acquisition. They acquired US-based Melissa and Doug, which are not just two people, it's a company, and they specialize in early childhood toys with high-quality offerings of open-ended creative and development wooden toys primarily, which will be complementary to Spin Master's existing portfolio. Let's look at that transaction. The price tag, the full purchase was about 1.1 billion, composed of 950 million. These are US dollars in upfront cash considerations and approximately 150 million in contingent consideration based on certain financial targets for the year 2024 fiscal and 2025 respectively. The 950 million upfront is to be funded through 450 million of cash from the balance sheet. Spin Master holds roughly Canadian 758 million in cash prior to the acquisition, with debt of just 66.9 million. And there's approximately 500 million of debt financing as well in this transaction. We do not know the acquisitions or Melissa and Doug's full debt position or balance sheet position, but Spin Master will be in a net debt position post-acquisition in all likelihood. It should not be an onerous one, given the strength of its capital structure and strong cash flow heading into the deal. Now, for the company's part, Melissa and Doug generated approximately 489 million of revenue US and approximately 90 million of EBITDA in 2022. This translates to a purchase price or EV to EBITDA multiple of 10.5, pre-cost synergies, which are about 25 to 30 million. If we assume a midpoint of those, the post-synergy EV to EBITDA multiple paid is estimated to be in the range of about 8.1 times their 2022 EBITDA. The transaction should close in the first quarter of the coming fiscal year, and the synergies should come through by the end of 2025, 2026, I believe. Let's look at the valuations here quickly. Following the announced transaction, based on the consensus forward EPS estimate in the range of $2.69, Spin Master trades with an EV/EBITDA multiple of 5.3 times and a PE of 13.59. Some comparables here. It's hard to have a direct comparison. Some larger companies like Mattel and Hasbro, they have, Mattel is about 17.5 PE, Hasbro is 14.7, but the sector generally trades at about 11.2 times multiple, whereas Spin Master is about 13.8 right now. So Spin Master is above the average. Track record of long-term growth is likely why you can see this, and some quality established brands, and they had that net cash balance sheet. Now, our take on it: Spin Master has a well-run business and has been a strong Canadian growth story. If we go back to 2015, the stock has more than doubled, or approximately doubled in value since that time. But over the past 5 years, the stock has been basically flat. This is likely due to the fact that normalized EPS over that period between now and 2017 is essentially been flat. The company had a spike in 2021 and in particular 2024 in terms of earnings, but the nature of its business is one of constant need for innovation. The goal to find the next great toy or toy line is always there. A hit can boost earnings significantly, a miss can hit earnings. Spin Master has shown a knack for hitting more than missing, and has come. This is it's come along with great current and legacy cash producing brands that it's put under its umbrella, which is how it has survived and thrived, created a great cash rich balance sheet in a tough business. That helped fund the Melissa and Doug acquisition. It appears like a smart and kind of a less miss and more hit business in the long term. Or it's more of a hit. It's less of a hit and miss business is what I'm trying to say. But due to the fickle hit and miss nature of the toy industry overall and the lower recurring model of these businesses, the below average multiples in terms of this company and the sector relative to what the market trades at, they're likely here to stay. Uh, Spin Master offers reasonable value, but the earnings on a quarter to quarter and even year to year basis will likely always fluctuate. While we admire the way the business is run, it's just too difficult to forecast profitability with a high degree of certainty with a given year or even a 2 to 3 year period. We monitored it. Our kids love their toys, but we're not buying it at present, despite what look like reasonable valuations and what looks like a reasonable acquisition.
Right. The acquisition, I mean, it does look interesting. And this is what we talk about with having a cash balance sheet, especially when you see market weakness, is it does provide companies with the opportunity to go in and purchase competitors and buy up market share that way. I will have to say, I do say $1.1 billion acquisition. That's a big deal relative
It's a
to the
big deal.
size
Yeah.
of, Spin Master's market cap, which is about just under 4 billion. So, there's risk with that, right? When you're buying such a large entity, the seller always knows more about it than the buyer, and there's the risk of integration and you know financially the transaction not turning out the way it was initially expected. So that's something that investors would want to watch. But I agree with your analysis. It's an interesting company. The fundamentals overall look good, but it's just really hard to know what's going to happen financially with the company on a year to year basis, given how that industry operates.
Yeah, and I had a slide in there pulling up the 10-year revenue growth on the company in US dollars. If you look back to December 2023 or 2013, it had about 539 million in revenues. Today, trailing months is 2.36 billion. So great growth there, but halfway through that, about in December, as at the year end 2018, they had 2.2 billion, and it's really today, 5 years later, is just 2.3. So they've really kind of flattened out. They had a spike up in last year and the year before, but they've kind of flattened out. If you look at that 4 or 5 year period there, between 2018 and today, and that's kind of on a gross profit basis, they're roughly flat, slightly above. So they've been able to generate strong cash flow, but to produce top line growth really hasn't been there. And they always have that. You have that hit and miss, and toys. Kids are fickle. Like, they can love Paw Patrol, can be the greatest thing, for example, in this 2 or 3 or 1 year given period, and then nobody could want anything to do with Paw Patrol, and it could be a toy that's completely off the shelves, or maybe it will be. There's some toys. I mean, it's hard to get a Barbie that lasts like 50. It's probably going to last 100 years, like an iconic brand like that. But I mean, they have a Rubik's Cube, which, there's probably not a ton of growth there, but they're probably going to milk some cash flows for that over a long term period. This brand, Melissa and Doug, we have a number of their products in house already. I mean, it's kind of puzzles and toys, maybe longer lasting. It's well thought of in the U.S. Canadian parent community. So maybe that's a way of smoothing out and not having the hit and miss type fluctuation that you can see in earnings with a business like this. But I mean, it does look like a solid purchase. If they could get like a Mattel type valuation, then you could have earnings growth over the next 2 years, and you could have a valuation re-rating potentially to like the 17 times where Mattel is. But the sector overall actually trades below where Spin Master trades today, and likely because it's difficult to sustain. You don't have a recurring toy that just everybody buys every year. You have to love that toy. You have to continue to, it has to be in, right? Like, it has to be, it's like fashion in some degrees. I mean, toys, it can become a toy that, oh, you don't want to have, for example, Paw Patrol anymore, right? Like no kid wants that. And then suddenly, it may be a great toy, but it's not in. We're not
Yeah.
buying it this year. So that is one thing that can happen to this business. And that's something that, for like, how do we factor that into a model or any type of future cash flow? It's just really difficult, other than to say we know that this will be a company with lumpy earnings. I got to say they've done a great job with innovation, like with the
Yeah.
Hatchimals and all that. Like they come out with winners year after year after year. So you're betting on management and the team there to continue to innovate. If they can, then it trades at reasonable valuations. It's just uh, it's very hard to predict that going forward. Other than to say you're investing in this management team, they've done well in the past. I think they'll do well in the future. And I guess that's what you would go on in this business. And maybe that's less tangible than we typically like, is
Yeah,
what I'm
and
trying
like
to say.
things change, and like this is something that I realized not too long ago. Like I don't know how you guys ended up getting your teaching your kids how to ride a bike, but these new glider bikes, like training wheels, are kind of almost becoming a thing of the past. Where I use training wheels to learn how to ride my bike.
Still,
Still, yeah, I've got training
it's
wheels
true.
on my bike. No, I do not. Um, but seeing my sister's kid,
Mm-hmm.
she doesn't want anything to do with the training wheels. She's basically learning the balance with her glider bike. And, is she even going to go to training wheels? Will she kind of skip? Will she go right up to almost, a bike without training wheels? It's just, it's interesting to see how things change when, I was on training wheels till I was like 13 or 14, and just kidding.
28, 9.
No, but
Yeah, no,
anyways,
it's true.
things change,
Things do change, and they've found a way to innovate, and I think this is a good buy. Like I
Mhm.
think that it's well thought of. I'm not sure the growth path. Maybe it continues to grow, but the one analysis that I saw on it was looking for 6 to 8% accretion to earnings. Well, they paid about 8 times EV to EBITDA, so they're paying a fair to it's going to be a long payback period on this. It would likely seem, but if you've got a brand that, if Melissa and Doug 50 years from now continues to grow over that period, I mean, it can be a great purchase, obviously, right? So it does seem like a well thought of brand, and if they take it over and continue to grow it, it could be a good situation for them long term.